So let's have a look at a sim example of the Euro US dollar and how I like to go about scalping. This is an hourly chart that I've got up. You can see it's nicely compressed, and I'll just show you guys what I look for. So really what you want to do is you want to identify these nice moves out of ranges, and you can see, for example, here you see how we have a nice move out. I want to reference this last bearish candle right here. So if I just take this horizontal line and I drop it down, okay, see right here, if I just zoom this up, this level right here, this is what I want to reference when price is starting to move down. I'll just compress this again, and if we measure this from here to here, okay, you can see we're looking around quite a big distance, like was 30 pips, 29 pips, 28 pips, somewhere around there. So if we go to our platform, I want to place a pending order, okay, and we're going to look at placing a buy limit 121.44. Plus the spread on this platform, it's 1 pip at the moment. Okay, so 4.5. Now, in terms of stop loss, this is a bit on the wide side for a scalp, but I just want to show you as an example. You can always look to fine tune this on a smaller time frame if you want to. I'm just going to show you this to keep it really simple. So we said 29 pips in terms of stop, and I want to target 29 pips, so 1 to 1. Okay, so you can put that in there, and essentially you just wait to see if price moves down. And I'll just step this forward. Actually, let's move to a smaller time frame. You can see this area across here somewhere. So this area here was at a level on hourly chart. You could even fine tune it more down to sort of this area in there. So you could even look at reducing the stop loss a little bit on here for a scalp. Okay, so 21.31 with a stop loss just below this low. If you wanted to, I'll just step this forward in the 5 minute. So there's a spike down. You can have that limit order ready, and you're looking for a reaction off that area. Okay, as I said, in this case it stops a little bit on the white side, but just for illustration purposes, this is what I'm looking at. Looking for a little pop up now. Okay, so then you got taken out, and you can see we made 29 pips. So basically 1 to 1. That's how I like to play these little scalps. We just go back to the hourly chart. I'll just clear all of that, and if we just step this forward, so now that we've had a little pop up, you see how we had a little rally. I want to reference, you see this last bearish candle, price is broken above. I want to reference that level right there, 21.65. Stop loss just below here now. It's going to be a bit on the large side. So yeah, the range is a bit large. We could even look to fine tune this slightly if we wanted to, but as I said, just for illustration purposes, I'll keep it really simple. So pending order, buy limit at 21.66, stop loss at 21.32. So this is a little bit on the large side here. I'll just show you, you can play these, you know, as scalps, but just placing your orders in the market and leaving them there. If you can't be at the screen all day long, 1 for 1. And if you get good at this, you can really do well. Now, volatility is pretty large on this at the moment, so that's why, you know, this small distance is like 35 pips. But we'll just see what happens here. So if we move over to the 5 minute chart, I just want to show you how price works around these areas. Let me step this forward. So here price comes down, hits the level, and we're just looking for a little pop up here. Now, if you want to, you can start reducing risk on these trades. Okay, everyone's going to do a little bit differently, as I've said on the rest of the course. but don't move it, you know, too aggressively. Otherwise, you know, if you're trading this sort of concept on a very small time frame, price can come back and stop you out and then sort of pop up. Okay, so there's another little pop up there off that area. There's another 35 pips banked. If we go back to the hourly chart and we just step this forward, okay, you see how we had another level right here. See how price broke above, come back, we reference this little bearish candle. See how it closes above, comes back, retest it, there's another pop up. We then have this one here. You see this bearish candle, price comes up, you can look to play a little bounce off that. Okay, like I said, they don't all work out. We've got this area up here, the last bullish candle. You can play that bounce off there with a little stop above here. Looking for a little pop. You can see how price hits the level. Okay, so your stop on there would have been 30 pips. There's the rebounds 49 pips. Okay, and that's essentially how I would play these sort of levels from level to level. Just step this forward a little bit. Okay, so that's how I'd play the hourly chart. If we just go to the 4 hour, we can do exactly the same thing here. I've just marked this little area off. You can see prices trading in mostly a large range here. Prices popped up, okay, came down, broke up, and you see this bearish candle right here. Okay, so this is the level you want to reference. Again, this is a large, pretty large area to watch, but just show you, you're looking to place an order right here, looking for a pop up. I'll just show you, you get this reaction, see that little reaction there. Okay, price comes down, see how you reference this candle right here. I'm stepping it forward a bit fast here, but see how price closes. Let's just go back, close above this last bearish candle. That's where you want to look to place your scalp order. Okay, see it comes right down. Let's go back there onto the, let's go to 15-minute chart quickly. So this level here we marked it off at. So there's a spike down. See the reaction off here. Okay, nice little bounce. And you can use the same concept on the smaller time frames, like a 15-minute chart or 30-minute chart. It's not as reliable as the higher time frame level, so I really prefer to trade the higher time frame levels. That's just my preference. So we just step price forward. So price is dropping now. Okay, so you've got this little range here. So your price closes below the range. So what I would look at here is a retest of this area right here. So for example, if we put a sell limit at 23.83 area, okay, we can put it a pip below as a 4-hour chart. Stop loss just above here. What's it, 30? No, it's just work out here quickly. So just above this bullish candle, so 20 pip, and you can shoot for 20 pips. Okay, so place that in there, and let's just go to the hourly chart, show you what that looks like. And you can see here, you could even go a step further and even fine tune this more. So instead of that 20 pip stop, you could even go, you see this little candle here, so we could even move that down from 20 to like 13. We'll just modify this. Let's go 13 pips, and we can go for 13 or 20 or even more. Okay, so like I said, everyone's going to do a little bit differently. Let's just step that forward. So there's a spike up, that's what you're looking for. Just go to the 5-minute chart here. I'm looking for a little pop lower. Okay, so there's your little pop down, and you get paid. So that's essentially what I like to do. And you can see here, same thing again. Price closes below the range there, come back, reference this last bullish candle. See the retest there, close below, retest. That's the sell right there. Okay, you'll see it happens over and over again. Okay, so there's the candle right there you want to reference for a buy, and you can see, look at that little pop up there. Okay, so I hope you found that helpful, and that's essentially how I look at scalping the market when it's quiet. And again, it is pretty hard work, and takes a lot of focus. So it's not for everybody, and you need a good feel for price action overall, but it can be done. And I know some guys that do exceptionally well just doing this, okay, and nothing else. You can see no fibs, no indicators, just pure price action, playing level to level.